Aloha YouTube, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to look at 3 monthly dividend companies that you should consider in your portfolio. If you're looking for companies that provide that monthly dividend payments, I got 3 solid companies for you to consider. So at this video, we are going to dive in and look at these 3 companies. I'm going to show you different types of sources that you can determine if these are worthy to be in your portfolios. These 3 companies have at least 10 years of consecutive dividend payments to reward those dividend investors. All 3 are considered undervalued by many analysis, and all 3 have at least 145% performance the last 10 years. So sit back, enjoy the video, do me a favor, hit that like button, and if you're not yet a subscriber, I would really appreciate it, and I would love for you to join. Hit that subscribe button, hit that notification bell, so you don't miss out on any of the videos that I put out. As always, please remember, all this is not financial advice. This is just me sharing. And now with that out of the way, let's take a look at these companies. First company is Main Street Capital. The ticker symbol is MAIN. For those of you that are not familiar, it is a company, it is a REIT. It provides debt and equity financing for buyouts. So go to their website if you're not familiar about it. Take a look at it. One of my top companies to invest on with those that are in the REIT section. So let's take a look at some of the portfolio. So if you go to the website, you can see some of the industries and some of the geographic areas where they provide all the stuff, and as well as facts, summary fact sheet. So you can see here, you can see the total performance investments per share. As you can see, it's going up, and then you can see the total return performance since the IPO. Let's take a look at Simply Safe Dividend. Based on their dividend safety score, they rated at 62, which is safe. The dividend yield at the time of this video is 6.55. Market cap is a mid cap. Now going along through the key metrics, you can see a payout ratio is about 67, forward payout ratio is 73. And then if you look at the dividend growth, the last 10 years, 4%, last 5 years, 3%, and the latest is 2%. I like this one right here, dividend streak of 15 years without a reduction, dividend growth of 12 years with consecutive increases. So if you're wondering, again, you get paid monthly, and your annual payout is 2.88 per share. Ex-dividend is January 4, which has passed, and then you get your payout of January 12. And then you get about 24 cents per share. And then you get a special payout. So one of the things that are pretty cool about this is there are certain special payouts where they give it to you. So as you can see, these are the special payouts on the up they give you guys. So it is reasonably valued, as you can see right here. Dividend yield is right there. It's a little bit high. It's getting close to the 52-week range, and then you got your PE ratio right there. And then looking over, you can see all the other facts and all the stats in there. Moving along to TipRanks, you can see the 10-year performance of this company is about 181. Smart score rated as a 9, which is outperform. You can see right here, hedge funds have increased their shares. And then you can see right here, if we go to analysis forecast, they go as a high of 45 with a 2% upside. And then the highest price target would be 47 with the lowest of 43. Moving along next to Seeking Alpha. Based on their rating, they rate it as a buy. Some there's a hold in there. And if you look at it, the 1-year performance is 21%. And then you got your 5-year performance of 28%. So, and then right here, you got all these other information. The dividend, you can see, if we move it a little bit closer, you can see here's the dividend grades. And then I always like to look at the dividend estimates. As you can see, based on their estimates in December 2024, it's about 289, and then 2025 you can see an estimate of 328. Now moving along to Simply Wall Street, based on their valuation, share price, and fair value. Currently, at the time of this video, is about 43. Fair value based on their estimate using their formula of discount cash flow model, rated as 54, which rated as undervalued, 18% undervalued. Next on the list is Realty Income. The ticker symbol is O. Another one of my favorite REITs. You can see right here the annualized dividend. So you can see right here, dividends haven't been increasing. So I like this chart of like consistent going up. And you can see right here, 123 dividend increases since the 1994, 105 consecutive quarterly increases, compound annual dividend growth rate of approximately 4%. Again, if you're not familiar with Realty Income, definitely go and check it out and do your research. More importantly, pause, hit that like button, hit that subscribe button if you haven't done so. Now let's move along to Simply Safe Dividend. Based on their dividend safety score, they rate it as safe of 80, and dividend yield is about 5.17. And then looking over to the key metrics, payout ratio 76, 75 is the forward payout ratio. Dividend growth, last 20 years 5%, last 3 years 3%, and then your full of 44%. And check this out, 54 years without a reduction, 28 years of consecutive increases. Again, you'll be paid monthly. Annual payout would be $3.08 per share. Ex-dividend date is December 29. So if you were going to buy this, I would say buy before the ex-dividend date. That way you can get credit for the monthly dividend incomes. And then you get your payout of January 12th. You can see from here, might be undervalued with the dividend yield a little bit higher. 52-week range is right in the middle of the high of 63, and then you got your ratio compared here. And then a little bit more down to the financials, you can see free cash flow, sales growth, total sales, return on equity, and then return on investment capital, operating, managing, net to debt equity, and then you got your interest coverage of 2.43. Swinging over to Realty TipRanks, based on their smart score, rated as a 10. You can see hedge funds have also increased their shares. 10-year performance of this one is 145. Quickly moving on to Seeking Alpha. 1-year return has been down, so you're about -8. So my opinion is a good time to buy. And then you got your rating of buys right here from all the rating summaries. And then finally on Simply Wall Street, you can see share price and value. Their fair value rated as 108, and then your current is 52. So based on their analysis, 45% undervalued, which is pretty impressive. I think that it would be a bargain at this point. And then finally, last on the list, Stag Industrial, ticker symbol is STAG. Another REIT which focuses on operating and single tenant properties. You can see from here, 41 number of states, 41, estimated value, and then the number of buildings is 568. Going to Simply Safe Dividend safety score of 60, which is borderline safe. You got your dividend yield of 3.77. And then moving along to the key metrics, payout ratio of 75, which is edging higher for REITs. Dividend streak of 11 years without a reduction. So if you look down here, 11 years without a reduction, 11 consecutive years of increases. So pretty good in my opinion. Last 10 years, 3%. Last 5 years, 1%. And then you got your latest in there. And then you can look over here. You get paid monthly, 147. Ex-dividend date December 28. And then you get your payout of January 16. And then based on there, could be overvalued. And then you got your price rent range here, which is getting closer to the 52-week high. And then you got more stats, financials, free cash flow per share, sales growth, total sales, return on investment capital, return on equity. And then moving over to TipRanks, based on their smart score, they're rated as 4. Hedge funds have decreased their shares. And then if you look at the 10-year performance, 221%. which is pretty impressive in my opinion. Moving along to Seeking Alpha, based on their performance, you can see a 16% the year, and then you got 5 years, which is 52. Moving along to Simply Wall Street, based on their share price and fair value, they rated as fair value of 52. Currently at the time of this video is 38 with a 20% undervalued. There we go, guys. Those are your 3 monthly dividend companies that I think, if you haven't done so, definitely go check them out. Do your research also. Please make sure you do your research and make sure that these companies fit into your dividend portfolio as a plan. Also, do me a favor and check out the other videos as well. There's a lot of good videos in my opinion that if you're looking for dividend investing companies, you definitely want to check them out. Alright guys, thank you so much for watching. Stay cool, keep investing, and I'll catch you guys in the next video. Right, take care. Aloha.